Assalamualaikum and hi everyone. Let me introduce myself and my group members. My name is Nurul Huda. My other group members are Siti Nur Amni Syafiqah, Nik Adila Fariha and Nurliana Afira.
So I will start with the introduction of inventory and warehousing cycle. In the slide, the cycle is important because it connects closely with the purchasing and sales cycles, make complex and time-consuming for audit. For manufacturing and retailing companies, inventory is often the largest asset, so any valuation error can mistake a financial statement. Challenges include tracking inventory across multiple locations and using different valuation methods. Accurate physical inspection and proper valuation are difficult but crucial to reflect a true financial position. This slide focuses on the existence assertion, which is crucial for confirming that all asset and liability recorded actually exist at a given date. Our audit objective here include verifying the inventory has been counted using text. We will discuss substantive tests like checking record transfer and comparing tag number to actual inventory along with observing inventory movement. We will also cover essential internal control such as proper segregation of duties and review various audit evidence sources. Finally, we will highlight common possible misstatements related to existence such as unrecorded inventory and overstate amount. Moving to this slide, we dive into the core of the completeness assertion. Our primary audit objective is to confirm that all existing inventory are not only taken but also comprehensively recorded, leaving no omission. To achieve this, we will review the class of transaction and relevant account in both, such as cost of goods sold and raw material account. Crucially, we will examine the internal control in place, including sequential numbering of purchase, requisition, and venture, regular bank recalculation, and physical inspection of the raw material storage area to ensure inventory is adequately secure against theft and unauthorized use. These controls are vital for ensuring the completeness of inventory records. On this slide, we are detailing the audit procedure specifically designed to achieve the objective of completeness. This means we are verified that all existing inventory items are properly tagged and fully recorded. We will examine both test controls such as observing inventory count and substantive tests like verifying tag numbers. This process helps us identify and address any possible misstatement such as understated amount or transaction in the inventory journal and misstatement cash disbursement related to inventory.
For assertion of right and obligation in inventory auditing, the main objective here is to confirm that all inventory reported in the financial statement truly belong to the company. This involves reviewing documents such as vendor invoice, purchase account, and good receipt note. Internal controls are vital. Inventory must be supported by proper documentation. As part of audit procedures, we test control by matching inventory records with supplier documents and run substantive tests to ensure nothing is mistaken, include like customer inventory. If this assertion fails, it can lead to overstatement or understatement of both inventory and cost of goods sold. For classification, our main goal is to make sure all inventory, from raw material to finished good, is put into the right category by the company. This is impact key accounts like cost of goods sold and account payable. Essentially, if inventory is classified wrong, this number will be wrong too. For internal controls, the company used things like requisition forms and master file to track and categorize inventory properly. These are important for getting it right from the start. In our audit, we will check inventory tags, compare them to what's actually there, and make sure the classification follows accounting rules. We also look at suppliers' invoice and other records are proof. The biggest risks here are inventory being misstated or simply put in the wrong category. This can mess up the financial picture.
Now, let's talk about accuracy. Accuracy is when inventory is counted and recorded accurately. For audit objective, it is to check whether the management are using the correct price to value the inventory and to obtain documentation that an adequate physical examination was made. For class of transaction and relevant account, the first one is raw material perpetual to metal file account. Second one is vendor's invoice. Next is finished good accounts. And lastly is costing inventory records. For internal control, it is appropriate method must be used when evaluative in accordance to accounting standard. Next is to observe the client counting procedures. For the audit procedures, the first one is test of control. We have to evaluate and observe clients' procedures, includes the test count of the inventory and drawing conclusion. For the substantive test, the auditors will determine the inventory valuation method and to record clients' count for any subsequent testing. Audit evidence. The first one is reconciliation of the document. Next is perpetual inventory master files. Next is receiving report. And last one is cost of accounting record. For the possible misstatement, it is overstatement or understatement amount of inventory in the balance sheet. Detailed tie-in. Detailed tie-in is correctly recorded the total amount of inventory that is correctly added and agrees with the amount in the general ledger. For the audit objective, it is to check whether the inventory recorded are correctly with the total amount in the general ledger. Class of transaction and relevant account. The first one is vendor invoice. Next is costing inventory record, stock confirmation issue, stock transfer issue, stock transfer receipt, and stock requisition. For internal control, the first one is follow the inventory listing schedule for raw material, work in process, and finished good in the account balance that agrees with the total. Next is to ensure the recorded of the shipment and the receipt that is printed during their physical counts of their inventories. For audit procedures, there is substantive test. Substantive control. We have to investigate the inventory listing schedule and compare it with the actual in the general ledger to detect error. For audit evidence, the first one is physical inventory purchase input, next is vendor's invoice, the third one is stock requisition, and the last one is inventory listing schedule. For possible misstatement, the first one is understatement or overstatement of inventory, and the second one is cost of goods sold.
Cut-off means that the auditor must ensure that all inventory is correctly classified on the tag, which is related to audit objective, to ensure all transactions related to inventory. It must be recorded in the proper period. Cut-off testing for inventory affect multiple transaction classes and account, including inventory account, payable account, cash and cash account, and inventory account. For internal control, all receiver report and delivery note should be processed daily to ensure that inventory record and update. All employer contributions for the year have been properly recorded even if received in the subsequent years. Next, audit procedure. First, test of the control. The auditor must examine the procedure manual and observe whether unrecorded vendor exists on the inventory. Second, by substantive test. The auditor will record in working paper for subsequent follow-up the last shipping document number used at the year end. Then, the auditor will select sample of the goods received note from immediately prior to the years and ensure that all goods are included in the year and inventory. Audit evidence provided to support this audit procedure. The auditor will rely on the cost of account period, which help trace the timing of transaction, and perpetual inventory master file, which provide real time on inventory level. Possible misstatement happen if internal control or cut-off procedure fail. Two major misstatements may occur if it is improper sale and inventory purchase and unrecorded inventory lead to understatement of asset or profit. The auditor objective of realizable value is to check whether there are inventory items that are obsolete and unusable. The transactions involved in this audit include the use of requisition document and account payable, which is reflect the purchase and liability for the inventory. The effective internal control is essential to ensure that obsolete inventory is identified. Two important controls are inventory management. Personnel should review inventory for obsolete, slow-moving, or excess quantity, and there should be periodic or annual comparison of goods on hand with the perpetual inventory record. Next, audit procedure. First, by test of control, which is the auditor will test for obsolete inventory by acquiring affected employees, and management decide that they will discuss with management and test the procedure for identifying obsolete. In addition, the auditor will review inventory items to confirm they are presented at fair value in financial statement. Next, substantive test. During the inventory account, identify the quantity of damaged goods and also alert if items that are damaged must or does be covered or located in appropriate place. The following is audit evidence may be used to support the auditor conclusion, which is the raw material perpetual inventory master file. It helps trace real-time inventory movement, cost accounting record, and physical inventory. Without proper procedure, the possibility of misstatement will happen. There is a risk of misstatement of recording the obsolete and unusable inventory item.
Here, for the explanation of question 3, we have a table highlighting some possible weakness in internal control, their impact on the company, and suggestion to fix them. Firstly, no inventory control can lead to theft or misuse due to untracked inventory. To fix this, a proper inventory control should be implemented. Secondly, inadequate purchase order documents can cause error in the receiving and ordering process. This can be improved by hiring someone to ensure all documents are properly distributed. Next, purchase authorized by unqualified individuals may lead to misstated or poor quality execution. This can be avoided by ensuring approvals come from the right authorized personnel. Lastly, inventory outflow through verbal communication can result in fraud or theft. To prevent this, use proper stock record or supporting documents to manage inventory movement. This suggestion aims to strengthen internal control and reduce the risk of losses or error.